Trump and Iran have officially concluded their negotiations. Trump announced that they have reached a certain agreement with Iran. Iran has suspended its nuclear weapons development program. As soon as this news came out, US stocks surged instantly. At the same time, the Strait of Hormuz has been fully reopened, meaning most oil tankers can now pass through the Strait of Hormuz smoothly. You can see that crude oil prices crashed immediately. Actually, during my live stream last week, I already told you guys that the top in crude oil had arrived. Brothers who watched my video last week or my live stream last week, I should know. I told you, crude oil had topped around $115 and not to go long anymore. Look at crude oil prices now, hasn't it crashed? Actually, all of this was predictable. I explained to you before that the war between the US and Iran couldn't last very long. The US couldn't afford to drag it out, and Iran couldn't win anyway. So if the war went through the first round of negotiations and the second round, there was a very high chance of a positive outcome in the short term. From the current situation, the negotiations are a good outcome. Crude oil prices had already collapsed in advance. So everything was within our plan. Anyone who watched my previous videos is making money right now. I told you earlier, once crude oil prices crash and collapse, US tech stocks will surge instantly, and gold will also surge. I already explained the underlying logic very clearly. Do you want me to explain it to you again? Smash the like button first. We've just started the live stream. Smash the likes first. I'll explain to you why I was able to predict in advance that crude oil had topped and then position in US tech stocks to make money. Brothers, smash the likes. Push the likes up. Okay, if you haven't followed yet, hit follow. Now let's start today's sharing. Today's sharing is very important. It can help you pick the right stocks in advance for next week and position correctly for the direction of US stocks. Understand? How to judge whether US stocks will strengthen or weaken in the coming period. By looking at crude oil price movements. We can do all of that. So smash the likes. Okay? Okay, first let's look at crude oil prices. A week ago, I already posted a video and went live to remind everyone that our indicator on crude oil had already shown a topping signal. It gave two sell signals in a row at around $110. Crude oil told us the price was about to crash. Be careful on the pullback. During that live stream, I reminded everyone, don't wait for the news to land before you buy tech stocks. Don't wait for the news to land before you short crude oil. By the time the news lands, the move is already over. Understand? Capital always moves ahead of the news. For example, with crude oil at that time, the price surged to around $112, $115. At this position, our indicator gave a short signal. At that time, I posted a video reminding everyone that crude oil prices were about to crash and US tech stocks would definitely surge. Look, after the sell signal appeared at this position, crude oil prices crashed 24%, an extremely exaggerated drop. Correspondingly, US tech stocks, such as Nvidia, rose 20% during the same period. So as long as I clearly read the capital flow in crude oil, I can most likely judge the direction of US tech stocks correctly too. At the same time, I want to remind everyone, don't listen to news when trading. Don't listen to so-called insider information. Look at what happened last night. Trump said they had reached the second round of negotiation agreement with Iran, and the Strait of Hormuz was fully open, right? As soon as this kind of news came out, crude oil prices had already crashed long before. It had already dropped 30%. If you really waited for this news to come out before shorting crude oil, you would most likely lose money. Because after the news came out yesterday, crude oil first fell, then instantly rebounded. See it? At this position, if you waited for the real news to land before shorting crude oil, you would most likely lose. Understand? Look carefully at this position. The news was released yesterday, but crude oil prices had already crashed 20% 9 days before the news came out. Yesterday, when the news landed, how much did the price fall? Only 5%? Then it was pushed straight back. A lot of people who listen to news, insider tips, or hot news to short crude oil definitely lost money yesterday, because after the price fell yesterday, it recovered instantly and printed a hammer candle. See it? I explained before, very long, lower shadow, very small body. This is a classic hammer candle. See it? So if you shorted crude oil at this position, you would most likely lose. But look at our AI quantitative indicator. Our short position was around $114. 9 days earlier, we had already detected that market capital was fleeing crude oil. Can you understand? Why could we do it? Because our AI model monitored capital movements in crude oil, monitored options, order positions, monitored institutional moves, and at the same time, through price action itself, discovered that around $116, it had formed a double top pattern. What is a double top pattern? The previous high had a big pullback, then the price retested the previous high. That forms a double top. The price then crashed directly. Through our AI model, we knew ahead of 99% of the market that crude oil prices had topped. Understand? So this is what I want to emphasize. Don't trade based on news. If you trade based on news, you will definitely lose money. Okay, back to crude oil itself. Why did we judge that after crude oil fell, US stocks would rise? And at the same time, we noticed that US tech stocks were about to rise, so we bought long positions and made money. Okay, what does a rise in crude oil prices only cause? Rising prices in the US. Because when crude oil prices rise, the cost of fueling goes up, transportation costs go up, and when transportation costs rise, the costs of all industries rise. Then prices will rise. Rising prices will only cause US inflation to rebound, which will directly cause the Fed to pause rate cuts. If the Fed pauses rate cuts, US stocks won't do well, because once rate cuts are paused, market capital will shrink, liquidity will tighten, and then no big players or institutions will be willing to buy stocks. They will only buy US dollars and US treasuries. So you could see a month ago, the dollar was performing quite well. That was because of the war. Capital flowed into dollars and treasuries for safety. But now, the war is gradually ending through negotiations. The war is improving, right? It's not fighting anymore. Look at US stocks, they fell 15%. Take Nvidia as an example. The market leader fell around 15%, then surged 22%. So, we need to understand the underlying logic and the impact of rising crude oil prices to position properly in US tech stocks and set up our long positions properly so we can steadily make money. Understand? If you understood, smash the like button. Earlier, I explained why judging crude oil price movements can help us trade US tech stocks well and trade US stocks well. Did you understand the underlying logic? Because it involves a transmission effect. Understand? Crude oil prices affect commodity prices. Commodity prices affect US inflation. Inflation directly affects whether the Fed pauses or accelerates rate cuts. Once rate cuts are paused, market capital tightens and US stocks fall. Once rate cut expectations return, market capital regains confidence, is willing to trade, is willing to invest, and institutions are willing to pump, then US stocks rise. Only when you understand these underlying logics can you make money in trading. And if I didn't tell you these things, you wouldn't figure them out yourself. Because we have spent more than 10 years trading, we have gone through too many big storms, so we have the experience. Understand? But if you can't learn it now, that's okay, because you can use AI to help you do it. AI can monitor market information 24 hours a day and automatically analyze it for you. For example, our indicator actually reminded us half a month ago that crude oil was forming a top and market capital was fleeing crude oil. Fleeing crude oil means crude oil prices will fall. When crude oil prices fall, that means US stocks will rise. Understand? Inflation pressure eases. Rate cut expectations return, and US stocks can only rise. Understand? This is a complete set of underlying logic. You need to figure it out. If you can't figure it out, just follow our indicator. Our indicator at this position repeatedly reminded us that crude oil had topped. Okay, back to the price itself. In the future, when we face this kind of movement, how do we judge that the top in crude oil has arrived? Actually, in previous live streams, I already reminded you, even if I don't listen to news and don't understand macro, I only look at the price itself and the candlestick movement itself. I can still judge that the top in crude oil has arrived and US stocks are about to surge. Understand? Although we mainly trade US stocks, we also need to pay attention to the movement of some commodities to help judge the direction of US stocks and trade US stocks better. This is also one of the key points I want to talk about today. So crude oil is one of our core reference targets. How to judge that crude oil has topped and US stocks are about to surge without caring about macro without listening to news, only looking at the candlestick itself and the price movement itself. If you want to hear this, smash the like button. I'm about to share more dry goods. If you haven't followed yet, hit follow. Brothers, top left corner. If you haven't followed, hit follow. You can only find my live stream later if you follow. Okay, let's look at how to judge that crude oil is about to crash and US stocks are about to rise, just by paying attention to the price movement itself. First, as I explained before, when you see this kind of candlestick, what would you do? When you see this candlestick, what is your first reaction? Comment section. Answer me, brothers. Buy, short, or stay flat? I'll state my view directly. When I see this big candlestick and the upper shadow is extremely long. See it? This upper shadow is super long, almost as long as the body. The lower shadow is almost non-existent, but the upper shadow is very long. A very long upper shadow only means one thing. The price once made a new high, but couldn't hold it. What does that mean? Didn't I explain in previous videos and live streams? When price makes a new high, but can't hold it, it means bearish momentum above is extremely strong. At the same time, the body and the length of the upper shadow are almost the same, which only means the bulls couldn't push the price higher. Once the price reached $115, a lot of people were shorting crude oil. This is the signal this candlestick gave me. Understand? So once this candlestick appears, my position management or risk control kicks in. At this position, I would no longer heavily long. Did you understand? Then my long positions would gradually be reduced. In the later movement, once the price reaches $115 again, I would instead short because this candlestick gave me a bad signal. Very long upper shadow, small body, and at this position, the volume, look at it yourself. This is classic volume expansion on the rise. Volume expansion rise to new high, but price can't hold that is a dangerous signal. It means a lot of people were desperately buying crude oil. But the price that should have been pushed higher was instead beaten down. Did you understand? So this is a very bad signal. After seeing this candlestick, pay attention. Price made a new high, then the long upper shadow appeared and price was beaten down. Plus volume expansion on the rise. Originally bullish momentum was very strong, but the price couldn't hold the new high. This is a divergent signal. You must be careful. Look at the later movement. I said once the price reached $115, I would even short. I believe the top was at $115. Okay, look, the price reached around $115. Didn't our indicator give a short signal? The corresponding price was also close to $110. Okay, let's wait a bit more. At this position, a short signal appeared, further confirming my view. This position is a top, a short-term top. You must be careful. At this moment, what do we start doing? Short crude oil, long US stocks. Understand? I already said earlier, once crude oil prices crash, US stocks will surge. The underlying logic was explained clearly just now. Then subconsciously, you should pick some quality tech stocks and buy. At that time, this position crude oil around $110. US stocks were all crashing, but we had already started bottom fishing US stocks because we discovered crude oil had topped. Understand? Okay, look at the later movement. This position has already reached $115. Now let's look at the performance of the price at $115. Does it match my expectation? Okay, at this position, $115 was hit instantly. Okay, another short signal appeared. This is what I said. I confirmed the short-term top at $115, just from this candlestick. In the later movement, once the price reaches $115 again, I will no longer buy. I will short crude oil, sell my long crude oil positions, short crude oil, and at the same time, immediately position in US tech stocks. This is the key point I want to talk about today. Up to this position, the price fell, kept falling until now, crashed more than 25%. That means, if you learn my method, I only look at the candlestick itself. At this position, price made a new high, but although bullish momentum was quite strong, the price still couldn't hold a brand new high, causing a very long upper shadow and forming the inverted vertical line I explained before. An inverted vertical line is extremely dangerous. This position tells you, even though I made a new high, the bearish momentum above is very strong. There are many shorts and price is not allowed to go higher. So the next time price reaches this selling pressure again, my first reaction is to short. My first reaction is that the price has topped. Crude oil prices are about to crash. What is my second reaction? Buy US tech stocks. I already explained earlier. Crude oil prices and tech stock prices move in opposite directions. Okay, look, when crude oil prices were around $115 and had topped, where was Nvidia's stock price? Let me show you. 10 days ago, Nvidia's stock price was where? It was at $177. When I discovered crude oil had topped and was about to crash, Nvidia's stock price was still at $177. At that moment, I heavily bought Nvidia stock because I knew crude oil was going to crash and US stocks were going to rise. Then I made 14% on Nvidia, and at the same time, I shorted crude oil and made around 20%. So these two orders, I already expressed my view on in previous videos. If you learned my judgment basis and learned my trading method, okay brothers, you made money. Not only did you make money on crude oil, but when most people were trading US stocks and losing money, you could still make money. Understand? This is my trading method. At the same time, I have already quantified our trading system into a set of indicators. I led 30 partners and spent 3 years building this AI quantitative system. It is now more precise than I am myself. Look at this position. Actually around $107. It already reminded me that crude oil had topped. Look at this position. When crude oil topped, where was the US stock price? 15 days before crude oil topped. Look at the US stock price. For example, Nvidia was at $172. If you bought at $172, according to my logic, you would have made a direct 18% gain. Did you understand? If you understood, smash the like button. This method demonstrates the correlation between different assets. Crude oil and the US stock market move in opposite directions. You need to understand the underlying logic and then use price action itself to find the buy points and sell points. Okay, I'll give everyone 10 seconds to think. Can you digest everything I just explained? Smash the like button, brothers. Smash the likes. First, push the likes up. Understand? Okay, have you figured it out? These things are so precise, and we have already quantified them. Okay, now I'll ask everyone. Crude oil prices have now crashed to around $86. Would you still short? Actually, I mentioned earlier, after we shorted crude oil at $115, we have already taken profit on the current short position. A lot of people shorted crude oil at this position yesterday after hearing the news and are now in a losing position. But we already took profit on our short. How to operate the short position afterward? Very simple. We need to watch how long until this downtrend line is broken. Once it breaks, crude oil prices are very likely to rebound. So, this position is also a key price level. Once crude oil prices break this downtrend line, we also need to reduce our US stock positions at the same time. Understand? Today, I'm not just talking about crude oil. I'm just showing you the correlation between crude oil and US stocks and how to use crude oil judgment to help us judge US stocks better. Understand? Right now, we need to watch. How long until this downtrend line is broken? Once it breaks, pay attention and reduce positions. Okay, from the current situation, there is still no very dangerous signal. Wait until it breaks this downtrend line. Then we need to reduce US stock positions at the same time. Okay, this is the first part I want to share with everyone today. How to use crude oil price movements to help us judge whether US stocks will have a big move. At least if you learn this one trick, you will be 7-8 days ahead of 99% of the people in the market in judging the direction of US stocks clearly. Understand? This thing is very important. Once you learn it, you will judge the direction and movement of US stocks faster and more accurately than others. Okay, now let's go back to US stocks themselves. How should we operate US stocks now? Since we already bottom fished in advance half a month ago, what is our current operation logic for US stocks? Today I'll spend 2 hours and explain it clearly to everyone. First, look at the market leader, Nvidia. Why do I always focus heavily on Nvidia? I said in previous live streams that in the next 3 to 5 years, the sector I pay most attention to in the US stock market is the AI sector. The leading company inside the AI sector is Nvidia. I only need to catch the leading company inside the leading sector. Then I can also judge the other core companies accurately, because the market follows the leader. Once the leading company's price crashes, then the other related companies such as Microsoft and Apple will also crash. Understand? And once the leading company such as Nvidia surges, then the other related companies will also surge. This is the correlation and linkage between assets. Not only is there linkage between crude oil and US stocks, there is also very strong linkage between US stocks themselves. Once you judge accurately, for example, because its level is judged accurately, then including Google, Apple, and other US stock levels, you will most likely not be wrong either. Can you understand? Everything I'm teaching is what institutions use. I'm revealing these things. They are the trading core of top traders. If you can understand, if you can comprehend, you will definitely make money. Okay, brothers? Smash the likes. Smash the likes. I'll continue. Okay? Smash follow. Now, today, how do we use Nvidia's stock movement to directly judge the price movement of Micron, Apple, Google, and these companies, and most likely not be wrong? For example, because at which position the butterfly pattern appeared. When the butterfly pattern appears, I explained before that our AI quantitative indicator shows a butterfly pattern. You need to pay attention to the two bottoms of the butterfly pattern. What do the two bottoms represent? A buy signal. That means at this position, around $166. Our AI quantitative indicator reminded us to buy. Nvidia showed a long signal about 18 days ago. Now let's compare. 18 days ago, for example, Google or other US stocks. Look at its stock movement 18 days ago. It was roughly at this position. Google's price was at $275. Then the price rose 22%. That means I clearly read Nvidia's stock movement through our AI quantitative indicator. Nvidia's level was at $165, bottomed and bought. You can simultaneously judge Google's movement. It also bottomed at this position and also showed a long signal at the bottom of the butterfly pattern. Isn't that amazing? This is the power of leading stocks. You only need to judge clearly. The leading stock in the US stock sector, then the other core companies in the same sector, will most likely have the same bottom. Understand? I never listen to news. I don't watch all kinds of hot news either. I only need to follow my indicator and price action itself. Once I discover the bottom of the leading stock and leading company, then most likely the bottoms of the companies in this sector will also appear. I will buy. I can make money on Nvidia, Google, Microsoft. Understand? So, how did we judge that the bottom of the butterfly pattern would appear around $165? And now, the stock price has risen to around $200. How should we operate? I will explain it clearly to you next. Do you want to hear? How to handle Nvidia's stock movement next week, where the next bottom in US stocks will appear? The price has already risen quite high. How should we respond? Can we short? I will explain everything clearly to you. Okay, smash more likes. Okay, smash more likes, brothers. Smash follow. If you haven't followed yet, you must follow. Otherwise, you won't see me later. Okay, first let me explain why we can use the AI quantitative indicator to automatically judge that Nvidia's bottom is at $165 and make high profits while at the same time making the gains on Google, Apple, and other core tech stocks. First, you need to understand one point. Nvidia and other tech companies have strong correlation because Nvidia is the leading company in the tech sector, the strongest company. Once the leading company's bottom appears, then the other core companies will correspondingly see bottoms too. Because this is the correlation between stocks. Capital is willing to push the leading company in the sector to rise. Right? Then the other core companies will also be hyped by capital after the leading company bottoms. Did you understand? This is correlation. You need to acknowledge this first. Then I look for Nvidia's level. First, I turn off our indicator because the indicator reminds automatically. I'm showing you naked candles now. Naked candlesticks. just price action itself. Facing this kind of market, how would you operate? For example, you see this segment of movement, Nvidia, at this position, $210, topped, and then the price pulled back. I said before, why this position is a top. I already explained it. Why could we know that $210 was a short-term top? Weren't these positions inverted vertical lines? Two inverted vertical lines. Extremely dangerous short-term top signals. From now on, remember, when the stock makes a new high, but prints this kind of long upper shadow with a very small body, like an inverted vertical candlestick, then you must be careful. A short-term top may have arrived. The price fell once, and after the fall, you thought, oh, the stock is going to crash further because it fell quite hard. Crash around 15%. Okay, you thought the stock would crash further. The price immediately rose and caught you off guard. You said, this position has already fallen 15%. Why is it rising again? Okay, you thought it would make a new high immediately. The price fell again. The big players use this kind of movement to cut you to pieces. You know, you would lose very badly in this kind of market. Okay, until this position fell further. The US-Iran war broke out. You thought this time it was stable. The price would definitely crash. After all, it had never touched a new high again, right? But at this position, once you shorted, the price immediately rose and gave a big surge, directly blowing up your position and bankrupting you. Why does your trading end up like this? Because you don't understand trend. You haven't judged where the key points of the trend are. In trading, we look for key points, wait for key points, then fire your bullets and chips to make money. Okay, first, as professional traders, seeing this kind of movement, how do we handle it? This position is undoubtedly a top, a short-term top. After these two candlesticks appeared, I would think that because the stock pulled back short-term, the price did crash here, right? But after the crash, I would not say I'm bearish forever just because it pulled back or bullish forever just because it rose. Why not? Because I need to look at the price movement itself. Look at Nvidia's previous movement. What was the stock showing? Wasn't it an uptrend? Constantly making new highs. Constantly making new highs. And pullback lows were also making higher lows. Right? Pullback lows were also making higher lows. At this position after the new high, a very dangerous signal appeared. The stock pulled back again. Okay, when this kind of movement appears, I would first think that in the long term, Nvidia is still in a bullish trend. Even if there is a pullback, I need to watch whether the key level is broken. Not just say it's falling so I keep being bearish, or it's rising so I keep being bullish forever. Understand? Back to this position. I judged that a pullback movement would appear. After the pullback, I pay attention to two key levels. First, at this position, the two lows form support. Right? Okay. Draw the support line. After drawing the support line, in the later movement, once it reaches between $168 and $167, it forms the rebound point for the later trend. Why these two levels? I explained before, the stock made a new high, pulled back, then surged again. At this position, a small pullback was still a new high. At these two levels, the bulls reacted very strongly. What does bulls reacted very strongly mean? When it reached this level, the price immediately rose, meaning a large number of bulls would buy at $166. A large number of institutional orders would be executed around $166, and institutions would protect the bottom at this position. Understand? Institutions will not allow the price to break $166 quickly. They will protect Nvidia's stock price at this position, what we call high-level bottom protection. Did you understand? Once you understand this logic, okay, when the price falls to $166 or $167, your first reaction should be to go long. So at this position, you should go long. And when the price falls to this key level, it printed a very standard vertical line. I said before that a vertical line is a bottom building pattern. At a key price, a vertical line appears. The candlestick itself verified that the support at this position is valid. Okay, look at the later movement. It retested around $166 again, didn't break, and the price rose. After rising, it fell back to this position again. $166, $167. The price rebounded again. Okay, at this position, why did a lot of people lose money shorting here? Because they didn't understand the previous key price levels. But we identified the key price level very far in advance. Let me check. 100 days in advance. We had already set the key price level. We don't need to look at news. We only need to look at the candlesticks. Once it falls to $167, our first reaction is to go long, not short. A lot of people see it fall to $167, and their first reaction is to short, and they end up losing. But our first reaction is to go long. Okay, at the same time, looking at the candlestick itself, although this position didn't print a hammer, you need to pay attention. At this position, the body of the bearish candle is very small, and a big bullish candle recovered it directly. This is a bottoming signal. Small bearish candle falls, big bullish candle recovers. A big bullish candle directly solidifies the price. Right? Small bearish candle falls, big bullish candle recovers directly. This is a bottoming signal. Did you understand? Look at the subsequent price it surged directly. This is our judgment basis. Of course, this is only one basis. At the same time, we need to combine volume. For example, let me turn on our quantitative indicator. Delete some of the lines I drew earlier. At this position, first, it is the low of the pullback, the violent surge level, right? After the violent surge, the price pulled back to this position. I should start paying attention, whether to go long, right? At the same time, look at this position. Our butterfly pattern appeared. I said pay attention to what in the butterfly pattern. The two bottoms. These two bottoms mean the market is about to start at this position. You must pay enough attention. The first butterfly bottom rose 15%. The second one directly surged more than 20%, right? At the same time, you need to pay attention to the volume at this position. Although the price pulled back, did volume expand? At this position, the volume, compared with the volume at the previous high, is very weak, showing a downward trend. So at this position, although the price fell hard, volume did not follow, right? Volume that does not follow the decline proves that bearish momentum is insufficient and the decline is not sustainable. So, this is also one of the standards we need to reference. So why can our butterfly pattern find the bottom so precisely for you? First is price action itself. In the previous low around $166. $166 was the previous low violent surge level. So when the price falls back to this level again, our AI quantitative system will automatically detect the previous low and at the same time detect institutional options orders or chip distribution zones and will detect the corresponding price. For example, around $165, there will be a large number of options orders protecting the bottom. It will also continuously monitor the volume on the decline at this position. The volume on the decline did not follow, but instead at this position, a big bullish candle rose and volume actually expanded. Look at this position. The volume is clearly larger than the previous. Red bearish volume. Right? Bearish volume on the decline did not surge, but bullish volume suddenly increased. That can only mean one thing. This price, around $166, is an important bullish reversal point. We want to make money at these reversal points. Okay, this is what we judge through price action itself. Tops and bottoms. How do we judge? I explained it very clearly. To summarize, first, find the chip dense zone. Find the level where institutions are willing to protect the price from falling further. The level where institutions are willing to pump. For example, this position. This is the first point. Find this first point. Then find the key price. After that, you need to look at the candlestick performance when the price falls to this key price. At this position, although there was a small bearish candle on the decline, volume did not follow, but a big bullish candle rose directly. The butterfly pattern appeared. Okay, this is the second point. Then this is the second bottoming signal. The price directly reversed at the key price. Understand? The candlestick fell to the key price and directly printed a big bullish candle, verifying that this price is indeed the level where institutions are willing to protect. So this is our second judgment point. The third point is to combine volume. whether volume follows the decline, whether volume follows the rise, or whether volume is shrinking on the decline and expanding on the rise. These things are also our third judgment point, right? At the same time, pay attention to the butterfly pattern. Once the bottom of the butterfly pattern appears, these three signals will resonate and then we can make money. At the same time, let's look at our AI quantitative indicator. At this position, an uptrend channel appeared. See it? A standard uptrend channel. Doesn't the lower edge of the uptrend channel form support for the trend? At this position, rise, pullback, rise, pullback. The low of the pullback hit the lower edge of the uptrend channel, forming further support for the price. It will continue to rise along this channel. Actually, in previous videos, I emphasized heavily that the lower edge of the uptrend channel must be paid attention to. This is also a key price level. Okay, at this position, it also surged directly. This is already 4 reasons helping us to trade. I don't need to look at news. I don't need to look at insider information. I only need to pay attention to the price itself and our AI quantitative indicator, and you can make money. Understand? This is why, in the recent period of market interpretation, we caught both lows and made money. Okay, of course, this is only the first part I talked about, how to catch NVIDIA's surge movement. Then the second part is, once we caught NVIDIA's surge movement, we also caught Google and Apple's surge movements. Because I said at the beginning, the core US stocks in the same sector have very high correlation. Use the same method to operate Google, right? Lock the key price at this position. Why at this position? Price rose and made a new high. Stock pullback. The low of the pullback formed the chip dense zone for orders. So the corresponding price is around $272. $272 is the level where institutions are willing to review. At least in the previous pullback, institutions push the rally directly from this position, right? Then if the price falls back to $272 later, will institutions protect it? These are things for you to think about. Okay, I locked the price at $272. Once the price falls to $272, I will consider going long. Look at this position. The price fell to $272. Our candlestick color changed, showing shrinking volume. This wave of decline, volume did not follow the bears. Volume decreased, right? Shrinking volume and bottoming. Bottoming signal. At the same time, this position also printed a big bullish candle upward. See it? Exactly the same movement as NVIDIA. Big bullish candle upward, fell to the key price $272. Bearish volume did not follow. Big bullish candle upward directly. At the key price, the candlestick performance says, I want to rise. And I have already risen. Capital has already voted with its feet. And bullish volume is attacking upward. Volume and price rising together. At the key price, it rebounded directly. Okay, this position is undoubtedly the bottom. At the same time, pay attention. This is the double bottom position of the butterfly pattern. This is already 4 signals resonating. Do you think I need to listen to news? When the real war negotiation positive news comes, the price has already gone to the moon. Do you buy then? I already made money and left. You only buy then. What are you doing? You just woke up, right? So, what we need to do is to be one step ahead. The market rewards those who are one step ahead. Those who are one step behind are the ones who pay the bill. Can you understand? This is how to directly deduce Google's level by judging NVIDIA. This method works every time. It is also my method for catching leading stocks. Did you understand? Brothers, smash the likes. Smash the likes and I'll continue. This is what I explained to you. The correlation between crude oil and US stocks. And the correlation between leading US stocks in the same sector. How to, after confirming the correlation, find the buy points in US stocks and make money on multiple leading stocks at the same time. These are core methods that institutions use. Once you master them, congratulations. You are not far from stable profits. Okay, smash the likes. If you haven't followed yet, hit follow. I will continue to explain to you how to handle NVIDIA's current stock movement, how to handle Google's stock movement, and at the same time, which sectors we should focus on next week. I will explain everything clearly to you. Brothers, don't rush. Finally, I will also quickly review for you. how much money we can actually make using our method on these stock movements, right? I'll use data to speak, not just talk empty words here. Okay, I'll explain it to you right away. The current handling method for Nvidia, the handling method for Google, the handling method for Apple, right? And SanDisk's handling method, these stocks everyone is concerned about. At the same time, I can also tell you that because I judge the price levels accurately, I can most likely judge Google, Apple, and SanDisk's price levels accurately too. Their movements will be 8 or 9 out of 10 correct. Okay, smash the likes first. Smash the likes first, brothers. Push the likes up. Push the popularity up. Smash the likes and push them up. I will continue. Okay, brothers. I just mentioned it earlier. In the second part, I will focus on sharing with you how I see Nvidia moving next week. If I judge Nvidia's stock movement correctly, then next week other core tech stocks in US stocks such as Google, Apple, Microsoft, and Micron will also follow Nvidia and walk the same kind of movement. Now I will continue to explain to you. Okay, if you want to hear it, smash the like button. Okay, keep smashing likes. Nvidia's current stock price. I'll turn off my indicator first. The stock price has already surged above $200 and is about to reach a key zone. Why did I remind you in previous videos that Nvidia's stock price has reached a very important lifeline level, a critical barrier? Why is it now approaching around $208? $208 was the important selling pressure from the previous high. This time, Nvidia's stock price is challenging this selling pressure. It is the lifeline. Understand? Come, I will show you this resistance zone very clearly. This position is a very important level for Nvidia next week. Will it make a new high or crash? We will find out next week. So next week, you must pay close attention. The key point for US stocks has arrived. The stock prices of core tech stocks in US stocks have reached a make or break edge. Understand? Why is this position the selling pressure from the previous high? The selling pressure here is very heavy because last time at this position, the stock had a big drop. See it? The stock fell more than 20%. A 20% drop. Think about it. How much capital? How many ordinary investors were trapped at $210? They went through 160 days of torture, feeling like every day was a year. One day the price suddenly broke even. What will this large number of investors do? Won't they choose to sell the Nvidia stock they bought at $210? Because they finally returned to cost price. Their first reaction is to run quickly. This will cause the price to pull back. This is the first point we need to pay attention to. Did you understand? Now put yourself in their shoes. If it were you, if you bought Nvidia at $211 160 days ago, were trapped for 160 days, once floating a loss of around 25%, and suddenly, one day, the price returned to your cost, would you sell or hold? Comment section, answer me. You were trapped for over 160 days. The price suddenly broke even. Would you sell or hold? Especially now that the war situation is not particularly clear. Although the negotiations have ended, what if fighting starts again? You need to consider these risk factors. So tell me, would you sell or hold? Right? I'll state my view directly. Based on our understanding of ordinary investors, when they have been trapped for a long time and suddenly break even, their first reaction is to sell. Why? Because they have been trapped for so long, they have lost money for so long. Now that the price has finally returned to their cost, they will definitely sell. Okay, since this kind of thinking will appear, then around this position, $210, it will form selling pressure. So next week, its stock price is very important. If it retests $210, it may walk this kind of movement. Because most people will sell their Nvidia stock at $210. Institutions will also take advantage of this public psychology and do some short-term bearish operations around $210. Understand? When the two resonate, it is very easy for the stock price to pull back. Even if it's only a short-term pullback, you still need to pay attention. Next week, we need to watch Nvidia's stock price. It has risen for half a month straight and is now rising further toward $210. If it walks a pullback, rebound, pullback, rebound, pullback. This kind of movement, you must be careful. Because when the stock price walks this kind of movement at a pressure level, selling pressure level, main force zone with oscillation and pullback, the high cannot immediately make a new high. You need to be careful. The stock price may have a big correction, causing most investors to lose money, and causing ordinary chasers who bought the high to lose. This is the goal the big players want to achieve. Understand? So, if Nvidia's stock price walks this kind of movement next week, stay alert. This position is very dangerous. Understand? Because I already explained it. Around $210, whether institutions or ordinary investors, they will choose to sell because it is important selling pressure. Do you understand? So, we need to watch the stock price movement at important selling pressure and see how price action itself chooses. Understood? But if it directly breaks out with major positive news, I will also be happy to see that. If it breaks directly at this position, that's even better. I will buy at the low of the pullback. For example, buy at this pullback low. Buy at this pullback low. Understand? So next week, if I short, I will short around $210. If it strongly breaks $212, I will stop loss the short position and then wait for the pullback to go long again. Two possible scripts. You can refer to them yourself, okay? But I remind you, do not heavily long at the high before it breaks above $210. Understand? Around $210. You should consider that the stock price may pull back. You must operate cautiously at this position. If the stock price does pull back, the correction could be quite large. Understood? This is our view on Nvidia's stock movement next week. Of course, right now our AI quantitative indicator has not yet shown a dangerous signal. So we can still observe for about another week. We will wait for our AI quantitative indicator to show this kind of short signal. Then we must be careful. Every time this kind of short signal appears, the stock price crashes. Okay, did you understand Nvidia's stock movement? Brothers, Nvidia's stock movement, how to handle it next week. Did you understand? Now, if it were you, how would you operate? Tell me. Next week, would you buy Nvidia or sell? Comment section, answer me. If it were you, would you heavily buy above $200, stay flat and watch, or lightly position? Tell me. Okay, I've been live for so long today. Tell me how you would operate around $210. I want to see if you have learned and understood. Okay, I'll state my view first. Next week for Nvidia, if the price rises to around $208, $207, I will definitely stand aside. I may even reduce my long position, gradually reduce the long position I bought at $166, and I may even test a short around $210. Understand? This is my view, because the selling pressure around $210 is very heavy. Similarly, look at the small time frame. Let me check if our indicator has given a dangerous signal yet. Currently, there is no dangerous signal yet, still relatively healthy. But the previous two highs, both gave dangerous signals, so I need to stay alert. When it reaches the high again, will it give a dangerous signal? So next week is really important. Okay, brothers. Okay, actually on the 4-hour time frame, you can see this because its bullish momentum is very strong. At this position, at least on the 4-hour time frame, our candlestick has already shown strong upward momentum. So next week, I will still mainly stand aside. I will not chase Nvidia at this position. I absolutely will not chase at this position. I will wait. I will wait for the candlestick to tell me this position has topped, then I will short. If it strongly breaks $210, I will add to the long on the right side. Understand? This is my view. Look at Google and the others, they are the same. The linkage between stocks is stronger than you imagine. Okay, come. Let's look at Nvidia's movement again. Then we will look at the synchronized movement of Google, SanDisk, and these companies. Okay, at this position, Nvidia showed the butterfly pattern, bottomed, right? Our AI quantitative indicator went long at $165. Nvidia gave me a long signal. After the price rose 20%, our current price has already reached an important node, near important selling pressure. At this place, do not chase anymore. You wait for the news to land. I said, what are you waiting for? Negotiation news, war news to land. The price had already surged or crashed long before. People who trade on news are destined not to make money. Do you agree or not? Comment section, type 1 if you agree, type 2 if you don't. Let me see. Are you trading based on insider information? Are you trading based on hot news? My view is very clear. I do not trade on insider information. Real insider information will not be known to you. You can't monitor it either, unless you have our AI model. But I myself do not trade on insider information. So my view is very clear. Capital always moves ahead of the news. The candlestick will show the price in advance, whether it is a bottom or a top. You only need to judge it in advance. Understand? Okay, comment section, type 1 or 2 and let me see. Let me see your own view. Okay, are you chasing the high and buying on news at this position, or not chasing, waiting in advance for a new price? Behavior itself to act? Are you making money by trading on insider information, or not making money by trading on insider information? Those who make money by insider information can type 1. Okay, those who trade on so-called hot news can type 1. Okay, actually, I have already made my view very clear. I only look at the candlestick. I only look at the AI quantitative indicator. News is definitely lagging. I'm asking you, do you believe it? Whether it's Buffett or Charlie Munger, or Livermore from the last era, or Stanley Kroll, these trading masters. Not a single one of them made money consistently by trading on insider information. They all rely on the company's own financial report data, the company's own performance, the company's own development prospects, combined with the price movement itself, to judge whether to buy or sell together. There has never been a trading master who consistently made money by real insider trading. None. Okay, think about it yourself. Brothers who typed 1, think about whether what I said is correct. At this position, we used our AI model to monitor that $166 is an important key price. Then after the price fell to this position, it printed a big bullish candle, rising with a big bullish candle. At the key support, a big bullish candle rose, and at the same time volume expanded. Bullish volume continued to increase, bearish volume shrank. This represents that bearish momentum is exhausted. Okay, this position verified that institutions would protect the bottom and support around $166, pushing the price higher. When the price fell to around $166, it triggered institutional entry orders, call orders, causing the stock price to surge all the way to around $200. This is why we didn't listen to news before and caught the precise level at the key point of the stock price. We monitored institutional orders, monitored where market liquidity is sufficient. For example, around $166 is a chip dense zone with sufficient liquidity. A large number of long orders will be placed here, right? We monitored the volume performance. Bearish volume shrank on the decline. Bullish volume expanded on the rise. At the same time, our AI indicator simultaneously gave a butterfly pattern. The two bottoms of the butterfly pattern formed an important rebound point for the later trend. The price itself at the two bottoms at that time, then it rose, right? Everything was within our expectation. We had already followed the price and bought at $166 without listening to any so-called negotiation news at all. Those things you won't know. By the time they really let you know, the price had already surged. For example, I said earlier, yesterday's US-Iran negotiation was positive news. Look at yesterday. When the negotiation landed, did the price rise? It only rose 1%. If you bought at this position, you couldn't make money. You might even lose money. But using our method, half a month before the market news was released, we had already bought. Capital had already ambushed and bought around $166 long before, waiting for the news to land. The price had already surged long ago. We had already made money long ago. Institutions had already made money long ago. This is why you lose money. Did you understand? You can't ambush in advance. You only chase the high. Chasing the high won't make you money. Okay, chasing on news won't make you money. Did you understand? If you understood, I'll explain Google to you. I already explained the essential handling method for NVIDIA and how we ambushed in advance to make money. I explained all the bases and methods very clearly. Did you understand? If you understood, type 1 brothers. Smash the likes. Smash follow. Smash the likes. If you haven't followed yet, you must follow. Why? Because once you follow, you can see me later. Okay, these dry goods, these core trading secrets of institutions, only I will teach them to you. Others won't teach you. Understand? Smash follow. Okay, I'll give everyone 10 seconds. Have you followed or not? Smash follow. People outside the live stream, click in and watch, okay? Now that we have finished NVIDIA, let's look at Google. Google's movement. Hey, it was also within our expectation. Using the same trading method, you will make a lot of money. Okay, make a lot of money. Come. Yesterday, when the news was released, US-Iran negotiations ended. Strait of Hormuz opened. After this news came out yesterday, NVIDIA rose 1%, Google rose 1.5%. So let me ask everyone, with this 1.5% rise, how much money can you make? You people who trade on news, after this news was released, how much money can you make? Only 1%. It's possible you can't even make this 1% because you may not have bought at the day's low. You may have bought at the high. That means you may still be in a losing position. Do you agree or not? Yesterday, those of you who listened to news to trade, could you make money? When the real news landed, the price had already risen 20% half a month earlier. What we do is make this 20% profit before the news is released. Can you understand? This is what we do. So how did we do it? I already showed you with NVIDIA earlier. Next, I will explain to you how, after I judged NVIDIA's stock movement correctly, I judged Google's stock movement correctly 8 or 9 times out of 10. Okay, Google's current price is around $339, which is also an important key level. Because its stock price is at a key level, Google is also at a key level. The correlation between them is very strong. Everyone look at where Google's previous high is. Isn't the previous high between $350 and $340? At this moment, Google's price is at $339. So at this moment, what should we do? Comment section, answer me. The price has reached the previous high again. The previous high is a big drop level. At this position, what should we do? Go long or short? Buy or sell? Think about it. After 60 days of decline, the price has returned to the same level again. Do you buy or sell? Do you heavily buy or heavily sell? Or stand aside and watch? Let me see everyone's trading level, okay? I have your thinking. Okay, I'll state my view first. I will not heavily buy around $340. I will use 2 trading ideas. First, if next week US stocks move relatively healthy, and Google or NVIDIA can strongly break the selling pressure, for example, next week it directly breaks $350, there will definitely be some small pullbacks. Then wait for the small pullback after it makes a higher high. If it walks this kind of movement, I will buy at the low of the second pullback. At this position, I will build positions, or I will build positions at the low of the first pullback. But the premise is that it must break $350 for me. Only after breaking $350 will I recognize that the selling pressure at this position is over. This is the first trading idea. The second trading idea, if the price rises to around $350 and suddenly prints a big bearish candle, smashes lower, the price rebounds, but cannot break $350 again, then smashes lower again. Okay, if next week it walks this kind of movement, I will short at the high of the rebound. Understand? At the rebound high, for example this secondary high, I will open the short position. Understand? I am not saying I must go long, nor am I saying I must short. I need the candlestick to tell me whether this position is rising or falling. Can you understand? It is not like, oh, I feel the price is very strong, so I heavily long at $350. I feel it can't break $350, so I heavily short directly. It is not like that. We need to pay attention to the signal the candlestick itself transmits to us. Trading is not gambling, nor is it guessing ups and downs. It is following the trend, following the price to make a trading plan. Once it matches our trading plan, we act. Understand? So next week, Google's movement, I have explained very clearly. Next week is a keynote. 2 possible movements. No matter which one it is, we have a response plan and we can make money. Did you understand? So next week, focus on around $350, whether it can strongly break. After a strong break, buy directly at the low of the pullback. If it breaks to $350 and a big bearish candle falls. For example, at this position, a big bearish candle falls, right? Smashes lower, then we just switch to short and that's it. No matter how it moves, we have a response plan. This is what we should do. Of course, people who heavily long at this position, I saw someone say earlier, they would heavily long Google around $340. Then I can only say, you are a pure gambler. Then why couldn't you buy around $270? Why did you wait for the news to land and heavily chase after the news was released? Because you don't have a good trading method. Understand? Once you master the price action trading method I just taught you, then you can make money. For example, at this position, near the low, retest the low. At this position, bearish volume shrank. Bullish. Volume expanded with a big bullish candle rising. This verified the institutional protection level, right? Around $270. After you bought, waiting for the news to land, you had already made explosive 20%, right? We had already made 20%. You only started trading then. Then of course, we can make money. You can't make money, right? At the same time, once the bottom of the butterfly pattern appears, it is a trading opportunity. Understand? At the same time, this position also retested the upper edge of this uptrend channel and also formed rebound support. All these things are inside our indicator. If you want our indicator, you can smash the like button. I will open some free trial slots for you to use. You can check my homepage, okay? I'll give everyone 20 seconds. If you want to try our indicator for free, you can click into my homepage and take a look. Okay, take a look. Okay, back to Google itself. So next week, it actually has a few important points. It is about to touch the double top of this butterfly pattern. Last time it touched the top of this butterfly pattern, the price pulled back. This time it will touch the top of this butterfly pattern again. Will the price pull back? Let's wait and see. After all, the previous two times at the top of the butterfly pattern, there was a crash. So we also need to pay attention. At least, our AI quantitative indicator has already told us. This position is quite dangerous. We must pay attention. Okay? Hey, then let's find the butterfly pattern. Look at this position. It is the same. Butterfly pattern top crashes. Butterfly pattern top crashes. Butterfly pattern bottom surges. Once you have our indicator, making money is really simple. Of course, I cannot guarantee you will get rich overnight. But I can tell you that once you master our AI quantitative indicator, you can indeed achieve some stable profits. No problem. Understand? Brothers, no problem. Google's movement next week has been explained very clearly. Actually, it is synchronized with Nvidia. Nvidia is currently also facing an important selling pressure. If it can break the important selling pressure, we will buy long on the pullback low. If it starts oscillating near the important selling pressure, then we must be careful. We will switch to short. So Nvidia and Google's movements are synchronized. Okay, let me show you. For example, Apple. Apple is also a stock that most investors like to trade. This position is also a classic butterfly pattern. Bottom and bought, surged, right? Bought at these two bottoms and it surged. I said, by the time the news comes out and you trade, it is already too late. Look at Apple's decline during this period. The stock fell. Its bottom was around $250. Around $250. At that time, many people didn't dare to buy because you were in panic. You were afraid the war would intensify. You were afraid the stock price would fall further, right? You didn't dare to buy. But often buying at this time can really make money. When all kinds of positive news appear, the stock price has already risen. You buy then, you are most likely catching the top. I have told you through Nvidia, Google and Apple stock movements. Trading on insider information is not reliable. Do you understand now? Look at this position. With Apple, using our trading method, how could you not make money, right? Same important support. At the important support, it started printing a vertical line. Bulls printed a big bullish candle. Volume expanded, right? At this position, volume was very large. right? The price rose. This itself is the message capital told me. I don't need to guess myself, right? Whether it is Apple, Google, or Nvidia. Using this method, you make money. Okay, later I will summarize for everyone again. I will summarize again how to make money using our trading method. I only need everyone to smash the like button for me. Push it up. I will continue. Okay, first boost the popularity for me. Okay, brothers. Come back to Nvidia itself. Nvidia, in the long term, I am still very bullish on this company. So in the future, I will continue to focus on trading Nvidia. Using the same method, actually look at Nvidia's past movement. Using our trading method, it works every time. Basically, you make money. For example, this segment of movement, the stock fell very hard, right? During the tariff war, when the US and the world launched the tariff war, when the stock crashed, using our trading method, you could actually make money too. You can compare. During the same period, Nvidia crashed. Google also crashed. Look at during the tariff war. Google's price also crashed, right? The stock crashed. I said their correlation is very strong. Crashed 30% to 40%. At the same time, they also bottomed at the same time. The stock price then started doubling gains. At this position, because it was the same tariff war that caused the stock to crash. Then it bottomed and doubled. When we trade, isn't it exactly to catch this kind of main rising wave? Every trader dreams of catching this kind of big move and getting rich in one wave. Isn't that your dream? Earlier, we already caught the recent Nvidia movement and the recent Google rebound, buying at the lowest point. I will use the same method to show you how I catch the bottom every time Nvidia and Google crash. The same method works every time. Okay, I will verify repeatedly for you whether our method is effective. If you want to hear, smash the like button first. 30 seconds, push the likes up for me. Push the popularity up. Okay? Brothers, show some unity. Push the likes up a bit. Push them up. If you haven't followed yet, hit follow. Then I will explain to you how every time there is a crash, we can buy at the very bottom. Okay, whether our method is effective, I will explain it clearly to you. I will review the movement. Then next week or next month or next year, when you encounter the same movement, you will know how to operate. Did you understand? Come, continue looking. The tariff war caused Nvidia's stock to crash. Most people seeing this kind of stock movement, I turn off the indicator first. When you see this kind of stock movement, what is your first reaction? Aren't you very scared? Don't you think the top has arrived? After all, at this position, many experts told you, the stock is going to crash, the tariff war will cause economic recession, all kinds of insider information, all kinds of hot news, all kinds of so-called experts told you, at this position, the stock is going to crash. Don't buy, because everyone is finished. AI has a bubble, the bubble has burst, right? All kinds of negative news came. You must have been very scared, right? Then you would short around $100. Okay, your ending is blowing up your account. You shorted at $100. The price instantly rebounded 13%. You must have lost money already, right? Later, the stock fell again. You thought again, this time it's really crashing. The crash is coming. Last time I judged correctly, it was just bad luck that it rebounded. This time, it fell to $95. Nvidia is definitely going to crash. This time, I can definitely make money. Okay, you shorted. Okay, look. Later, the stock price directly surged. You lost money again. Losing money is still a small thing. You will miss a big surge. Because the later movement was a super big surge. You will miss more than 90% of the gains. Understand? Why? Why did many people short at this position? First, they believed some insider information, thinking the stock was finished, AI has a bubble, the tariff war would continue, the global economy would collapse. All kinds of insider information. You believe the insider information. This is one reason you lost money. The second reason is you didn't understand the candlestick movement. You didn't judge whether the current trend was a simple pullback or a top. You didn't have a good method to verify whether institutions would buy or sell during the decline. You couldn't figure any of this out, so you lost money. And during this decline, when you bought it, fell. When you sold it, rose. You kept losing money. You would curse the market. You would think, why institutions keep harvesting you? Actually, it's not that. It's just that you haven't mastered institutional trading methods. Once you master institutional trading methods, you can make money. Okay, let me reveal to you how institutions operate in this kind of Nvidia stock movement. When the market frequently has negative news, how do institutions operate? Do you want to hear me explain it to you? If you want to hear, smash the like button. Okay, smash likes, smash follow, push them up. Okay, for this segment of movement first, I need to look at the previous trend. The previous trend was very obvious because overall it was showing what? A one-sided uptrend, right? First, determine the one-sided uptrend. Okay, then my later operation will be mainly long-term long, short-term short as secondary, right? Then at this position, the stock pulled back. The tariff war caused the stock to fall. A pullback appeared. Then I will pay attention to 2 points. One is the lower support. At this position, it formed a short-term downtrend channel. Inside this channel, my action is very simple. Retest the lower edge of the channel. Retest and go long. Break the upper edge of the channel. I chase long because I said Nvidia's long-term trend is upward. So I mainly long, try to reduce short operations. Break resistance. For example, in the later movement, when it breaks this resistance line, I will directly go long, retest the lower support. I will buy opportunistically long positions. Look at the later movement. Wait for it to break. When it breaks, I will buy directly. Wait for it to retest. When it retests, I will buy directly. At this position, it retested, right? It retested. At the same time as the retest, pay attention to the candlestick itself. When the candlestick retested the key support, didn't it print a vertical line? It printed a vertical line. I told you before, this is a bottoming signal. Then you should buy. Wait for it to break the upper resistance. Then add directly. Okay, at this position it broke, right? After breaking, add directly at $122. At this position, retest and buy. Then can you make money on this wave of movement? Look at whether the later movement surged. Using my trading method, by first determining the previous movement's trend, it belongs to an uptrend. When this kind of pullback appears, I don't panic. I am not blindly chasing highs, nor am I blindly going long. I judge the key points of the movement and at the same time combine volume. Okay, at this moment, I turn on my quantitative indicator and take a look. Does my quantitative indicator operate according to my thinking? At this position, I said, retest around $97. I want to go long, right? Our indicator at this position gave a long signal. When it broke, at this position add. Our indicator will also remind us to buy and add. Because I look at the daily time frame, the cycle is relatively large. On the hourly time frame, at this position, it would definitely remind me to add. Okay, these two levels match my judgment. Why the same? Because this indicator absorb and learn the trading methods of all top traders in the market, all institutional trading methods. We let AI review 24 hours a day. Learn, summarize, and quantify the AI quantitative indicator. So it does better than me, reacts faster than me, because it has no emotions. It will strictly execute. Understand? Okay, at this position, our indicator around $97. After buying, the stock price rose all the way, right? In the middle, there were also short-term buy points, also made around 20%. At this position, made around 10%. So its levels are more precise than mine. Okay, look again. After buying, many people can't hold the position. You can't hold the position because you don't know where the movement will go. You are scared. You are not sure. But after institutions buy, they will firmly hold. Why can they firmly hold? First, turn off my indicator. When it broke, we added. When it retested the low, we bought, right? These two levels are very precise. Then where will institutions hold to? Institutions will observe the candlestick movement. If the candlestick in this segment of movement shows what? Big rises and small falls, they will not sell. They will keep holding. It will show highs, making higher highs. Lows, also making higher lows. Highs, making higher highs. Lows, also making higher lows. When it walks this kind of movement, you firmly hold. Don't panic and sell. Because to make money, We need to catch the big move to make money, not make 2 or 3 points and run. Understand? So institutions facing this kind of movement will definitely firmly hold until the later movement starts to consolidate, cannot make a new high. Lows start making lower lows, highs also making lower highs. When it walks this kind of movement, institutions will sell at these positions. Understand? So you can buy and then firmly hold a profitable position. Because you understand, to make money, you definitely need to catch the big move, not make a few points and run. Did you understand this institutional behavior? Now, let's look at the AI quantitative indicator. Hey, our AI quantitative indicator is the same. After it discovered this kind of movement, it will automatically remind us. Look at this position. Did the candlestick color change? When the candlestick color changes, it tells you this wave of rise is very healthy. The trend has not ended yet. You firmly hold your position. That means after we bought at $97, it will let you make more than 80% and still let you hold the position. You can firmly hold the position. Ordinary people can't do it. You make 2 points and you panic, right? Look, at this position, a sell signal appeared. When the price shows a sell signal, you sell directly. It is exactly the same as institutional operation thinking. Because before I turned on the indicator for you, I already told you. When the stock appears high-level consolidation, cannot make a new high, shows a signal of making lower highs. Weak oscillation, you can consider selling the chips you bought at the bottom. And our indicator has completely learned institutional trading thinking. After buying at the bottom, after buying at $97, it waited until the stock could not make a new high. During weak oscillation at $188, it reminded us to sell this order. Our profit is doubled. Did you understand? Smash the like button, okay? I am teaching core dry goods. I hope brothers smash more likes, give more support. Okay, I'll give everyone 10 seconds. Smash the likes. Smash the likes. Then think about whether what I taught helps you. If it helps, type 1. If it doesn't help, type 2. Let me see. Okay, those who think the host teaching makes sense, those who agree, type agree or type 1. All fine, okay? This is Nvidia's stock movement. Using the method I just taught you, you can accurately catch the bottom. Okay, at the same time, we need to pay attention. In the future, when this kind of crash appears, you must use the daily time frame to determine a key price. What is a key price? I explained earlier, the level where institutions are willing to protect the price. That level is the key price. You need to think from the institution's perspective. The tariff war caused the price to fall, but because this company's long-term trend belongs to an uptrend, then this kind of decline is a buying opportunity for you. So at which level would I buy to get a better, cheaper price? This is what institutions think about. Now let's look. The previous time it made a new high. The stock pulled back, made a new high again, pull back again. Where was its low range? Can you see it directly? Comment section, answer me. Look at the previous price movement at this position. Do you know the key price? Actually, I saw it at a glance. At this position, that means the key price range is between $91 and $80. This is the key price for the later trend because in the previous pullback, this was where institutions heavily bought, the level where they were willing to protect, the level where they were willing to support the price. It was between $90 and $80. So when the price falls back to between $91 and $80 again, we should learn institutional thinking. That is to buy. Don't chase shorts. Don't act like leaks. If you act like ordinary investors, you will lose money. Understand? Now look, at this position, I determined the key price. Look at this position. The price fell to around $90. Shouldn't you prepare to go long? At the same time, look at institutions' performance at the same position. What is the candlestick at this position? A big bullish candle can only mean institutions really fell to around $90 and were doing what? Desperately buying. But at this time, most retail investors were desperately selling. This is the difference between making money and not making money. This is the difference between professional traders and unprofessional traders. Can you understand? So at this position, the key price formed key support. After hitting the key support, the institutional candlestick performance is buying. At the same time, look at the volume. The surrounding volume expanded. Super large volume buying. Understand? Then I delete the lines I drew and take a look. First, through the candlestick itself, I determined that between $91 and $80 is the key price. When the price falls to this range, I should buy. At the same time, look at the volume. At this position, volume expanded, right? When bears fell, volume shrank. When bulls counterattacked, volume expanded. This can only mean one thing. Institutions were heavily buying at the key support. We need to follow institutions to make money. When institutions are heavily buying, if you don't follow behind them, you can't make money. We need to follow institutions to buy when it is cheap. To make money, look at this position. At the same time, our AI quantitative indicator also reminded. At this position, bearish momentum shrank, so it showed a blue candlestick. A big bullish candle rose. Bullish volume attacked upward. A long signal appeared directly. Trading is so simple. You only need to master the method and you can make money. Understand? So why did we buy at this position? Why? When most people lost money during the tariff war, could we still make money? The reason is here. Okay, ordinary people can't do it, but we can. Not only can we do it, we can perfectly replicate it. Can you understand? I can not only master this indicator skillfully, I have also quantified this indicator into an AI model. If you want to get my AI model, you can click into my homepage. Okay, look at this position. After buying, the stock price surged. That was just a black swan. The stock price had panic selling. Institutions continued buying at this position. We only need to follow institutions to make money. How to judge? I already told you. At the same time, look at this position. After the decline, it continuously broke this Bollinger Band channel, broke the channel, and immediately stood back. Broke the channel and immediately stood back. This position also broke the channel and immediately stood back. Every time it stood back into the channel, it was a wave of rise. You only need to wait for it to break the channel and rise. And you can also make money. Of course, this is for later. Later, I will dedicate a live stream to teach you the Bollinger Band channel. Did you understand? This is Nvidia. Just this wave of movement can make a lot of money. Google is the same. Okay, Google using the same method. You can also catch the bottom here and make big money. Look at this position. Turn off the indicator. I won't let you see the indicator. When you see this kind of stock movement, what is your first reaction? Don't you feel the stock is falling and you want to short, right? This is your first instinct. Type 1 if yes. Type 2 if no. Let me see. Okay? At this position, when you see the stock, Google stock movement, you feel like shorting. Type 1. Type 2 if you want to go long. Okay, first state the view. Based on my understanding of you, at this position, you would most likely short. Most likely short. Because the stock is falling, plus all kinds of news telling you, tariff war, AI bubble, all kinds of negative news will stimulate you to short. This is the most real thought. When everyone is most pessimistic, the stock price is most likely to surge. If I get this kind of stock movement, my first reaction is not to go long, nor to short. My first reaction is to find the key level below. First, look at the long-term trend. Is Google's long-term trend showing a one-sided rise? Look at this position, a one-sided rising movement. Even if there is a pullback in the middle, it can eventually make a new high. Okay, determine this first. Then, the current stock price pullback because of the tariff war, right? So, I want to see at which level institutions are willing to heavily buy. Okay, let me find the price. Okay, the first level willing to buy is around $166. Around $166 is the price where institutions are willing to support the bottom. The second range is around $150. These two prices are the prices I am willing to follow institutions to buy. Understand? Okay, then I look at the later movement. I first determine this price. I first don't make a conclusion about whether the movement is rising or falling. I only look at the price. When it falls to the institutional bottom protection price, I determine what is the candlestick performance. Okay, moving forward, the price fell to around $166. Between $160 and $166. At this position, the stock appeared its first rebound. This is my first short-term long position. My profit was between 2% and 5%. Not bad. Later, the price broke below $162 and $160. Okay, I waited for the important support at $150 below. This is my second position to go long. Okay, at this position, didn't it fall to around $150? The price printed a big bullish candle to recover. At this position, it first fell below $150. Maybe a bit scary, but the next day, a big bullish candle recovered. At this position, I determined the movement was about to start. Especially the third day, another big bullish candle stood firm. Okay, I completely determined $150 is its bottom. Even if it is a short rebound, I still need to buy. If I can catch a big rebound, that's best. So I would buy at $150. After buying, the stock price rebounded 15%. I already made money. I am already in an undefeated position. How much I make depends on the movement. At this position, I directly caught the bottom, bought around $150. What was the highest it rose to? Above $300. This order, my profit was more than 100%. Can you understand? So how did I find this kind of level? First, during the decline, when most of you thought you still wanted to short, I would not judge long or short. I would only judge the key price, the price where institutions are willing to buy. At which level will institutions place a large number of call options? At which level will institutions place long positions? Where is the chip dance zone? I will think about it. Okay, once I find the level, I have it. At the same time, I will look at volume. When volume falls to this key price, is it volume expansion on the rise? Shrinking on the decline? When it falls to this level, is it a big bearish candle on the decline? Understand? Then okay, open the indicator and look. Same levels. I didn't have the indicator open earlier. Same levels. I said earlier, around $160. First, long position entered, made between 8% and 5%. Second order was at $150. This order directly doubled, right? Why could I judge this kind of key price? Because our AI quantitative indicator told me around $160. This position was the previous violent surge level. Around $150 was also the previous big violent surge level. These two key prices are where institutions will place call option orders. The second position, our AI quantitative model monitored that institutions have a large number of orders protecting the bottom at this position, not allowing the price to fall further. It has fallen enough. At the same time, our AI quantitative indicator monitored that the candlestick itself turned blue. Blue means bearish momentum decreased. Bearish momentum decreased, combined with a big bullish candle, bullish volume expansion rise. Then this position is the reversal point. Can you understand? At the same time, the bottom of the butterfly pattern appeared. The corresponding price was at $149, around $149 and $150. That was my buy point. Understand? My indicator continuously gave 4 long signals. I explained the reasons very clearly. Okay, you saw the subsequent price movement. When most people were still chasing shorts on Google, we had already bought. When most people were still in panic, we had already positioned. So we could make money. Understand? So brothers, through Nvidia and Google's movements, I have explained our trading method very clearly. Whether it is how to operate Google's current movement, or how we made excess returns on Google recently, including how we made excess returns on Nvidia recently, I have explained everything very clearly. At the same time, I reviewed for you, under the same war background, when the US launched the tariff war, when the stock market crashed, when most people were losing money, we followed institutions to buy, and also made a